Welcome back, traders. It's TK for ReadySetFutures. It's about 20:06 on the 20th of October, and this is your daily market wrap-up for today, 20 October 2016. No delay. Let's get right into it. We've got 4 markets and 10 minutes to cover it in. How about some headlines? Copper on the day, busted lower at the open. Gold trading off of its upper value area boundary and back to that developing volume weighted average price that we've talked about. Crude toying with our resistance / support line, and the ES, well, it's having a hard time just figuring it out. Let's get right into it, traders. On the screen, you have the copper market. It's our hourly chart of the copper market. We have 2 volume profiles on the chart just to orient you. These are the same profiles that we've had up since the beginning of the channel. And you see price down here trading actually outside of the lower volume node that we called out earlier in the week and late last week, as we saw price break below this support area up here at around 215. We said we liked copper down here at 209 and even a bit lower at 208.90. Today's action was lower. It was lower off of the open. I'm just going to kind of pull this up. You can see here around 6:30 we dropped below and hit our low point at 208.45 before trading up further into that little trading range that we have here. We continue to like the copper market lower. We are going to find it chopping around down here. You can see there's quite a bit of volume that's beginning to build between 209.20 and even a bit further at 208.50. But of note, the trade is consolidating below our value area boundaries. So that lower value area boundary here at 211.30. The longer that we continue to gain acceptance down here, we're going to be seeing copper trade even lower. If you guys take a look at the card and peek over at our weekly review, take a look in the commitment to traders section of that report. It's toward the end, at least the back half of the weekly review, and you can see what our discussion was in copper when it came to commitment of traders. We're going to head over to the gold market, guys, and as you see here, gold has found a bid over the past few days, but today's action right into this upper value area boundary at 1270, causing some chop in the overnight before selling back off to the developing volume weighted average price at 1266. Not unexpected. We can expect a trading range to really form up here, 1275 to 1252. I would not be surprised to see some additional acceptance and some additional volume building here around the early 1270s to extend the value area up about 1275, 1278 even, before we continue to chop around. Again, as you know, we have been talking about a move in gold. The whole thesis of this move is lower before higher. We got the lower move. Commitment to trader action actually is supporting our thesis of a higher move. We talked about that again in the weekly review. And we expect gold to continue to consolidate around here and build volume in this region before taking off higher. I would imagine at some point we're going to sweep the lows down here at 1240. We may even run up to 1280, 1290 before we continue to find acceptance in this region. In this market, in my opinion, you pick a side, you pick a bias, and you trade it. That is how I trade the markets, and that was what we've got for you today on gold. Heading over to crude. Interesting day on crude. The volume profile that you see on the chart is actually from OPEC's agreement to agree several weeks ago. I am not going to call it an agreement to cut production because I don't believe it is. Your mileage will vary on that. You may feel that, yeah, this is a lock, stock, and barrel type of deal. It's all sealed up. I might remind you a couple of developments, though, that may change your mind or at least allow you to hopefully think critically about that position. One, Iraq has said that they do not agree with the oil minister's assessment of their output. Iran also coming back saying the exact same thing. The speculative interests on the commitment to trader report also, again, at their highest point. We linked over to a Zero Hedge article. And as well, you can see it in our commitment or trader report. The same pattern is beginning to repeat, and the same pattern in the market is beginning to play out. Whether or not that will finish and we see crude oil lower, we don't know. But, you know, history generally rhymes. You can see our value area boundary extended now all the way up here to $52.18. The other day we drew this new trend line on our chart with, you know, these consecutive swings. Earlier in the week we busted that wide open, and now we are trading right back down to it. As I zoom in, you can clearly see the action today was lower, and it really found a hard time, almost no bid, except for this bar right here at 8:30 as we crossed into that that resistance line. You can kind of see it here. Here's where it happened around 7:40, 7:45. We caught a bid right off of it. However, we traded back to it into the close and actually closed below. Whether or not that is meaningful, who knows? We have a volume point of control here at $50.33 and a developing volume weighted average price at $49.38. I would imagine we continue to sell off, we continue to trade down into that volume weighted average price, and we test it, and we test these value area boundaries both here at 48.61, and I continue to zoom out. We have a second volume profile here on the chart from around August where we had those intermediate swing lows. Its upper value area boundary is 48.82, so the $48, $49 area will be of interest. We just don't know when. But our thesis in crude has been short, which is why we even drew this downward sloping trend line, just to kind of make a point of it. You may feel very differently about the crude market, and there is definitely a case to be made for crude long. But today's action, down, right? We did have yesterday in the EIA inventory report on oil quite a great draw. It was, I don't know if it was a record-setting draw or not, but it was a significant draw. The expectation was, I think, for a 2.3 million barrel build, and we actually got, I think, a 3.5 million or a 4 million barrel draw, which was absolutely significant. Gasoline stocks, on the other hand, very different story. Very different story. Anyway, last market, I think we're going to come in under 10 minutes here, guys, is the ES. And look at the ES, right? So interesting to note, I'm going to back this out, and you see our Fibonacci sequence here. This was drawn in on the chart back at the beginning of November, and we haven't moved it. What's great to see is actually this action down here. This is good news for me because it means that we've cleared out the stops and we're free to move lower in this market. What I'm seeing here, again, this is all tea leaf reading. This lower red dotted line is the volume weighted average price from Brexit. This most recent volume profile here is from the latest Federal Reserve balk at raising rates. You can see the developing volume weighted average prices beginning to converge, but you also, of note, see no acceptance above the volume weighted average price since Brexit after this sweeping of the lows. Today, we also got busted at the open, essentially at that line, right? And it happened multiple times. So this is today's action. We traded up above it in the overnight and lost the bid. Whether or not that was from the debate, who knows? But right off of the open, we just caught a bid and slammed into that line before selling back off. Rejection off of that line. I like this market short. I've been trading it short. My system, currently the momentum filter is back on for a short trade, so I will be picking a spot in order to place an order. I like it back up here. You see that we have kind of changed our chart up just slightly. Last week we had showing a triangle type of pattern, but after we broke and then we tested the triangle, that lower resistance boundary, and we were rejected off of it, we can confirm, or at least I could confirm, that that's no longer a valid pattern, and we move into kind of a trend channel movement. And so coming back up to the upper portion of this trend line would not be unheard of. 2153 also right there, and that is also our volume point of control for both the Brexit, post-Brexit action, as well as this post-Fed action, and it's coincident now with our downward sloping trend line. So that is likely where I'm going to post up and wait for the market to come to me. If I begin to see chop, I might move it back into 21.45, but who knows, right? Who knows? My money, my account. Same thing with you. Your money, your account. That's what we got for you today, traders. We're a little over 10 minutes, and we're going to keep it to 10 minutes. So with that, I want to encourage you guys and thank you for subscribing. I want to thank you guys for commenting, and I want to thank you guys for sharing it. If you like this, like it. If you really like it, go ahead and sub. If you like it that much more and you think some of your folks in your social circles could have some benefit out of this, by all means share it. There's nothing proprietary in this. Last thing I want to say, traders, it's your account, it's your money, and I wish you the best of luck in tomorrow's market. Again, this is TK, and this is your daily market wrap-up for the 20th of October, 2016.